if you want to pay attention to where you should invest your money or where you want to move or how it is that you should move accordingly, don't get finessed by just buying on site without doing your research. Insurers are now walking away from policies related to certain homes, especially in California, Miami, and in certain parts throughout the United States of America, including Arizona. And they're starting to also walk away from car insurance policies. And if that is not a clear sign of how it is that you need to be moving more financially, then I don't know what is. Make sure y'all hit a like for the algorithm, subscribe to the channel, and turn on your notifications.
I want to start off here in California because when it rains, it pours, just like the storms that we saw.
Reading super chat shortly. Shout out to my dog, DJ Kane, in the building
this year. And now that we're just a little bit closer to summer, we are learning another home insurance provider is fanning the flames. Allstate has stopped accepting new policies in California because of wildfires, among other things. So you already know we're bringing in Becca Hobegger with tonight's main point.
You know, Alex, if you buy a home in California and you're looking for an insurance policy, don't look to Allstate, State Farm, or AIG. AIG got out of California's homeowners insurance market altogether, whereas Allstate and State Farm are keeping their current homeowners insurance policies, just not taking new ones. Now,
so think about that for a minute. AIG, and I've already had this conversation based off of what was going on over in Florida, right? Florida, they completely en masse. I mean, in some parts of southern Florida and throughout the state of Florida, right? They understand that climate is happening, that the sea level is rising. They understand that it's the hardest market for you to continue to live in as far as the hurricanes and everything that's happening over there. It's the top state for you to actually get your car stolen in. It's a monstrous state with regard to how it is that people are operating there. And most insurers has completely pulled out of Florida, even ahead of the hurricane that just hit and flooded large parts of Tampa, right? The same thing is happening on the other side of the country with California. AIG just completely pulled out altogether and said, we no longer even insuring people over there. State Farm and other insurers said, listen, we'll keep the people that's currently on the policy right now, but we're not going to insure anybody else in the state. We're not writing no new policies. If you don't already have a policy with us, we're not rocking with you at all. If that's not a surefire way for you to make an informed decision of where it is that you want to move, stop moving to places based off of what's happening on fucking Instagram. Stop moving to places just based off of what's going on with the weather. You can live there, but that is not where you should put the majority of your investment. And the biggest investment that most people have is A, their 401k, and then 1B is their home. The majority of your net worth for most people is tied up in the place that they live in. Do not do it over in California.
for many people in the state, this is a familiar story.
We keep our property pretty well clear.
Back in 2019, I spoke with Laura and Charlie Callahan, who'd owned their home in El Dorado County for more than 25 years.
We had our homeowners insurance for over 20 years.
See all them trees around them? That's a risk for wildfire. A wildfire is going to be sweeping through eventually. No homeowner insurance policy or no homeowner insurance company want to insure them because they're not trying to get it's a waste of money. They already know it's a losing proposition. At the end of the day, for them, it comes back down to the money. It has nothing to do with state regulations. It has nothing to do with any of that. The insurance company is in business to make money. They hope that you never file a claim. They want you to continue to pay for your policy. And so as a result of it, all of that float money allows for them to continue to become profitable while at the same time preventing you from then being able to file a claim, hoping that they don't find themselves on the wrong end of that stick. And so they're making an informed decision based off of data and information that they crunch every single day. If the insurance companies don't even want to be there, what makes you think that you should be there?
And we got the letter, as people refer to it, and we were canceled. I'm now paying 4 times what I was paying before. It's gone from less than $1,000 a year to almost $4,000 a year.
At the time, California Insurance Commissioner Ricardo Lara was holding town hall forums, hearing from people living in the foothills who were finding their homeowners insurance policy canceled or the cost sharply increased.
Can you imagine going from paying $1,000 a year to $4,000 a year in homeowners insurance just because you got to go with whoever is left within the state or within that particular city and that particular county in order to insure you? I just read an article, and I'm going to read it to you guys, from the Wall Street Journal. It just recently dropped, and it said Americans are bailing on home insurance altogether. If that ain't one of the biggest risks, I don't know what is. I'm going to read that to you in a minute.
You went from $24.83 a year.
Yeah, to would be $48.85.
Wow.
Yeah.
Wow. In other words, it won't surprise folks in the foothills and other rural, more wildfire-prone areas to hear that now State Farm, Allstate, and AIG have stopped offering new homeowners insurance policies in California, with AIG leaving the homeowners insurance market here altogether. Allstate paused new homeowners, condo, and commercial insurance policies in California last year so we can continue to protect current customers, a spokesperson told us. State Farm stopped taking new applications, including all business and personal lines property and casualty insurance effective May 27th, the company said. The California Department of Insurance says current customers will not lose their insurance and people are still able to renew their existing policies. State Farm added they made this decision due to historic increases in construction costs outpacing inflation, rapidly growing catastrophe exposure, and a challenging reinsurance.
Let's use that third one right there. That third one, they tried to mix it in with all of the rest of the stuff, right? But the third one is the one that they really paying attention to. Rapidly growing catastrophe exposure, meaning that there is going to be hell to pay as far as the environments that we live in because we're not doing the thing that's in our own best interest. And as a result, you are going to be facing a catastrophe, and it's a strong possibility that we're gonna be on the hook for covering it, and we are not willing to do so because we're gonna protect the best interests of our customers and our shareholders in the company. That's the real reason why they pulling out. That's the main reason that they pulling out.
Market.
The insurance that we all never want to use, we had to rely on, and State Farm was one of the big companies that had to pay claims because that's the business they're in.
While Allstate and State Farm are now limiting operations in California, more than 100 companies are still offering homeowners insurance in the state, though the Department of Insurance says it depends on the home's features, its wildfire risk score, and the community in which it's located.
Some people are paying more for their homeowners insurance than they are for their mortgages.
And the thing is,
Could you imagine paying more for your homeowner's insurance than you're paying for your mortgage? The true cost of home ownership is not really being properly calculated when it comes to how it is that you're supposed to be moving. Here, let me show you something really quickly. I'm gonna show you something really quickly. Shout out to Jock Quinn. Shout out to everybody that's contributing over into the platform. I'm gonna be reading these super chats shortly. Let's see if I can get this up on the screen for you guys. It's probably a little bit small because I'm looking at the Wall Street Journal on Apple News, but it's basically breaking down and it's highlighting. Here, we don't even need to show that. Let me remove this from my screen and then I'm going to break it down for you myself. So it's basically saying homeowners are now foregoing insurance altogether, gambling that the likelihood, and this is according to the Wall Street Journal, gambling that the likelihood of a disaster isn't high enough to justify the cost of the policy. So when large homeowner insurance companies move away, and then you have to go and find another policy that's 3 and 4 times the amount that you were paying, right? People are not seeing the value of it, or they're unwilling to pay for it, and so what they do is they just go without it. It's the same thing that people are doing with their cars. It's the same thing that people are doing across the board throughout the United States. They deciding to make an informed decision and they risking it all. And they saying, listen, the likelihood of what's going to happen, we willing to gamble with not paying a policy at all. They skipping homeowners insurance, and they saying they doing so because they can no longer afford the rising premiums. National average for home insurance based on $250,000 in dwelling coverage increased this year, up 20% from 2022. Others, particularly among wealthy, say they have enough money saved to rebuild or move elsewhere should their home be destroyed. So rich people say, listen, we can relocate. We don't care anything about it. The risk of foregoing a policy are significant when you don't have an insurance and your home is destroyed by fire. You don't just lose your house and its contents. You must also have to pay for removing your home's remains as well as the cost to rebuild it. Few people can financially withstand the loss of an uninsured home. According to financial advisors, it's particularly precarious considering a high price to rebuild or buy a home in many areas of the country. It's crazy. It's crazy. So now people are saying that, listen, I'm going to continue to go without homeowners insurance altogether, and I'm no longer even going to put myself in a position to it. This is crazy. I've never seen this type of stuff happen en masse across the board, and seeing how people are moving financially and seeing this play out the way that it's playing out. I've never seen this type of stuff happen. I've never heard of this type of thing happening. At least I've never heard anybody report on it to this extent.